Hey traders, checking in on the stock market today. CPI reaction in the morning, bear control from there. I ended up shorting a couple names that are counter trend, and we will look at contained control and what I mean by that. All right, so CPI reaction was initially bearish, and then the bears controlled the day from there after some decent bounces that led to lower highs. We'll look at that in just a moment. I'll talk about a couple swing trades that I took bearish that are counter trend. And that's that. So my trading today was very interesting. Let's talk psychology and flow state first. So yesterday in the flow, like I said, probably 40 plus different orders, both directions, back and forth, had a really good trading day. And today it was just interesting to observe how close I was to being there again. I had the direction right on a bunch of trades that I was looking at, but my execution was ever so slightly off, and it was off enough to throw a wrench in flow state. And so it was very clear to recognize today for me, this is not like yesterday. And that helped me. So rather than having a solid red day today, I was just tiny green day. I was bouncing around, break even, just not really getting any traction anywhere, but didn't have a solid red day, which was nice. But it was very notable to me. I was right. Bigger picture in my directions. I was wrong with my trade execution. And so it led to me exiting or stopping out of positions right before getting follow through. And again, it went back to just having to keep the bigger picture, most likely scenario consistently in our minds. Because there would be times, just one really rough example, the NASDAQ gave us a very clear 30-minute tightening range where if we fail on this bounce to break the high, it's just a 30-minute lower high. And then I'm going to be watching for an equilibrium. And so once we pulled back on this initial bounce here, it was a 5-minute bounce that took place, and it ended up getting some solid follow through. But I was looking bearish on this bounce, saying, okay, well, we haven't really changed any trends for the bulls. And then I reminded myself, oh yeah, but you're looking for a 30-minute high or low, and you might not have to change those shorter term trends. So in the end, I had a couple positions that I scaled into, ended up getting out break even, as opposed to being a little bit more patient and having a couple positions that I then hold for hours. And it's the kind of thing where if I enter prematurely and I don't stop out, but I have a decent red position, getting back to break even, psychologically, it's very easy to then exit those positions and forget the most likely scenario. Well, what if this 30-minute equilibrium breaks bear? So that is what my day was essentially. But we'll talk about a couple swing trades that I took. And again, it's just hitting the pause button, pumping the brakes, and ensuring that I am able to recognize when things are going well and when I'm in flow state and when I'm not, and pumping the gas and pumping the brakes accordingly. So S&P 500, higher open. Look at this wall of resistance. It's more clear on the NASDAQ. We started stronger in SPY because XLF and XLV, this is something that has happened a handful of times over the past couple of weeks. So we start with QQQ, tech, semiconductors, growth, all weaker. XLV, XLF holding on stronger. And we putted around and bounced around in 30-minute equilibrium and traded all through the morning. And then as we rolled over bearish, all of our sectors, everybody that was on Team Bull joined Team Bear and hit a new low of the day. And the scales tilted. The first half of the day, we were doing this, saying, okay, some names are bulls, some names are bears, SPY's a lot stronger than QQQ. And then we rolled over and everybody went weak. So S&P 500, 4-hour on the futures chart here, just keeping it simple. Next time we bounce, anything under the high of today is just a 4-hour lower high. Just like the bounce today, anything under the high of yesterday was a 4-hour lower high. Just like the bounce yesterday, anything under the high of the previous day was just a 4-hour lower high. We're staying very consistent, and we're keeping an hourly downtrend. Ever since the FOMC fake out reaction, we've been in an hourly downtrend. We have not confirmed an hourly uptrend since then. So keeping it simple, this market structure does not change as long as we are in an hourly downtrend. So SPY, stair-step pattern, lower high every day, 5 days in a row. And again, we're not oversold. We are not oversold on the daily time frame. The weekly is close to oversold. Historically speaking, the weekly RSI being oversold is a good time for long-term buys. That doesn't mean it's the bottom, because it can definitely keep going down for multiple weeks once that RSI hits oversold. But if we're looking big picture, buying the S&P 500 in weekly oversold conditions historically has gone well if you just zoom out long enough. So I just made a post on my Facebook. Again, I don't have any trading. I have trading friends, but not on my Facebook. All my trading friends are in the TheChartGuys community, and I will occasionally make posts like near the bottom of the 2018 dump. I made a Facebook post like, hey, we want to be buying fear. And the post I made today was, if you are in your 20s and your 30s, you want the stock market to get as weak as possible, and you are looking, research what the SPY ETF is, it pays dividends, look into what dollar cost averaging is, because again, if we're looking long-term, weekly oversold, generally a good time to be initiating some positions. I would certainly much rather be buying now long-term than at any point in the last year plus. So what I'm going to be talking about in the short term, whenever I reference a bounce, I don't mean a bottom. I'm going to be talking about a bounce because I'm looking for a bounce, but we're just going to look for daily lower highs to be the result of that bounce. So just to lay out what I'm looking for from here, in the short term, I'm looking for a bounce, and then I will be looking for a daily lower high bearish entry. So what are the signs of some bounce? Hourly trend change obviously would be one of them, but let's talk about what I mean contained pullback. This is a contained drop. An uncontained drop, a non-contained drop, whatever you want to call it, I would consider this drop here, the magnitude and speed of that drop, and then of course the CVID dump, the 2018 dump, those were not contained. Those were free fall and just very fast and then V-shape. This one is different. It's contained. It is not allowing oversold conditions to get extreme. So think about if you're a bear and you want things to get as weak as possible. You know that there are bulls out there like myself that are going to buy historical oversold RSI levels. There are bots and algos and trading systems that have a trigger. If these indicator conditions are met, buy. And we're not seeing a lot of those indicator conditions met because we cool off the RSI. So again, the fact, I looked at the NASDAQ futures chart today. At the end of the day, when we were extremely weak, we're not oversold on the daily, we're not oversold on the 12-hour, we're not oversold on the 4-hour, and we're not oversold on the hourly. I found that astounding. To be that weak, down 3% after the week that we have had, and to not be oversold on any one of those time frames, which to me is contained and intentional as to how it is being walked down instead of chucked down. What I'm going to be looking for is a gap down for a bounce. We have not been gapping down often. It has happened, but not often at all. In the free fall drops, we gap down. So that's something I'm looking at for a bounce. I am much more comfortable playing a gap down for a bounce. And if we look at SPY, going back to the free fall style drop, what was the bottom? The gap down. Gap down, flush, and then the bounce. So here on this drop, we have gap down, just barely there. But again, to me, it's contained. The higher opens are the green go signal for bears on the morning. And I'm looking for the weak open. And we saw that today. We opened lower because of the CPI reaction, and we had a bounce all morning. So higher opens, the bears are looking to short, and gap downs, I'm looking for a bounce. If we don't get a gap down, I'm going to have to look for some other kind of signal. But if we gap down, I'm interested in scouting a bounce, even if it's just to look for an hourly lower high. I've been in a non-bounce mindset for quite some time now, and part of that is the lack of gap downs. I am much more comfortable playing a bounce on a gap down open. The NASDAQ, the resistance levels that we see from space on this futures chart on the way down, quadruple top, triple top, and now we got another one. Let's zoom into the hourly where it's more clear. Triple top. It's just so clear. And every time it is this clear, the bears have confidence playing off those levels. And we know that if we do not break those levels, the bulls don't prove a thing. So the NASDAQ has a lot of space where we can bounce and just set a 4-hour lower high. And again, we're not oversold on any time frame except the weekly is just getting there. I would be much more interested in a bounce if the weekly RSI is just getting oversold and the daily RSI is down at 26. But it's not. It's at 32 or whatever. So the way the morning played out, nice 30-minute equilibrium, it broke bear, and the bears owned the day from there. That was the turning point. That's where all of our team bull sectors started to join team bear on this 2-hour drop there. Semiconductors still watching this falling wedge, weak close at the lows. Again, as long as tech and growth and semiconductors are leading the way down, it's notable to me. And it was notable during this morning where, okay, we're bouncing at the open with the CPI reaction leading to the lower open for the bounce, but it's not the names that I want to be leading to have confidence in this bounce. It was XLV and XLF leading the bounce, not QQQ, growth, and semiconductors. That is important for me. SMH has a triple top the last 3 days, 219, or actually 230.26. If we fall through this falling wedge with a big red day tomorrow and a weak close, I remove these lines. Again, I'm not going to buy based on these support lines. It's just a visual guide. If we bounce, all right, I'm interested in this pattern. But we have to bounce first. Tesla is approaching daily oversold conditions. We're right there. And the monthly support of 700. How beat up are we? 4-hour RSI only just getting oversold. Hourly hardly got there at the end of the day. But potential for a daily oversold bounce. And again, what matters more to me than 700 on Tesla is what QQQ is doing. So what I'm watching for, if I'm interested in a playoff of 700 support, and very often we know we break a psychological support level right before a bounce. So I wouldn't be surprised for 700 to break and then see a bounce attempt. Obviously, it all depends on what the broader market is doing. But what I would be looking for to be interested in a bounce off of or around that level would be, is QQQ showing me signs of a bounce? That's the most important aspect. But waterfall drop, lower high every day, 5 days in a row. We've dropped at this point 24% over the last 5 days. And so keeping an eye out for that support level for a potential play from that level. If it breaks, bears are in complete control. I've been highlighting the Apple key support long term. It broke. Apple lead bear today. Very clear, down 5%. Netflix down 6%. But this is notable. This was the lead bull general on Team Tech. Most important stock in the market. Gave way today. So now we're going to be watching for it to head to daily oversold conditions. And we can see what happens when Apple hits daily RSI 30. Yes, it can drop under it, and it has a few times over the last 5 years. But ever since 2020, we've bounced right around that level, maybe 4 or 5 times. Just something to keep an eye on. I'm not interested in the Apple bounce, but it's a clear bear break. And that's another big win in the column for the bears. Microsoft did it first. Apple followed along. Had a friend make that glass. It's always nice to have glass-blowing friends. XLV. Solid bounce. You can see it was a lead bull today. Inside bar bull break, but closing at the low. Bull's not proving a thing. If we drop down and break 125.70, our new daily lower high is set, and the bears keep their control. So still a daily lower high guide. Financial sector failed the high of yesterday, rolled over, didn't break the low of yesterday, but still clearly weak. Lower high every day, last 5 days. We know bulls aren't going anywhere if they can't break the high of the previous day. IWM, weak. Fresh lows, look at the volume. We're watching for a volume climax. This is one factor as to why I'm scouting a short-term bounce. Again, just looking for a lower high, but I am interested in a bounce now. And there are a few names out there that are starting to look a little climaxy. And so one of them would be ARK. ARK has just been getting absolutely trashed this earnings season. But look at the volume. It's ramping up, and it is the highest volume day that we've seen in, and again, I'm talking shares, not dollar volume, but is that highest dollar volume or highest share count ever? It is. Highest share count ever day. Free fall, falling knife, complete fear, bear control, capitulation kind of setup. And what will you notice about this drop? Not one gap down. It's contained. No gap downs. There's been a couple, but not on this drop, not on this highly magnified move down. So again, if I see a move like this, it gets my attention big time the first time we see a gap down. To be looking for a temporary bottom. We'll see if we get it. But XBI is in the same boat where, again, we've bounced or dropped, I should say, at this point. It's now up to 20% plus in the last 5 days. We are oversold on the monthly, the weekly, the daily. Not quite at the 4-hour, not quite at the hourly, but it's a lot more beat up. And again, look at the volume. The volume is starting to get really high. Volume climaxes mark tops and bottoms very often. Here was a volume climax. Granted, it was just a daily bear flag, but it was a solid daily bounce there. Here's a volume climax marking a multiple day bounce. Here's a volume climax marking a multiple day bounce. They're all over. And so I'm looking for one to shape up from here. I would love if XBI gaps down open tomorrow to be looking to play a bounce. And then I'll look to play an hourly lower high. Give me a gap down to play a bounce, scale out, and then scout an hourly lower high using EMA 12 resistance as a guide to potentially go short. But we'll see. This is all, every day I see what the pre-market setup is, and that's when I do my real game plan. So right now I have a very loose game plan, and something could shape up pre-market where I just say, man, not interested. So it all depends on what tomorrow brings. But I just know that, okay, I have not been interested in a daily bounce. I've been real good about sticking bearish for someone who loves bounces, but it's starting to call me a little bit. So I'm starting to pay attention. And that's just me being aggressive. Again, the only people looking for a bounce down here are the most aggressive traders who have some bounce success. So the dollar, I am watching this rising wedge, and I am starting to short the dollar. And I was a bit premature with my first entry today. Entered this morning, and we did see a big time bounce from there as the broader market continued to see weakness. Fortunately for me, the instrument I'm using, UUP, to short it's the least volatile thing I've probably ever traded. I have to use significant capital for it to be a worthwhile trade. So what I'm watching for is this resistance line to stay resistance. And essentially, I'm going to stick with this trade because, again, I'm looking for charts. I mean, look at this chart here. And granted, it's the dollar, and you can give me a bunch of fundamental reasons, sure. But every chart that has looked like this over the past year and a half, what has happened? We dropped notably. So I'm looking for a top to be set in the dollar. And I might be a little early, but I haven't attempted to short the dollar at any point in the last 3 months. Probably at any point, I don't know if I've ever attempted to short the dollar in my life. So I figured this is a good time to give it my first attempt. So I got one entry. I will look for a potential second entry up at this resistance line. And my stop out will be if we clearly and convincingly see a higher high here. Because right now what I'm looking at is, all right, there's 103.93 and we broke it, but only by 13 cents. And then we broke it, but only by 12 cents. So if we break it and it's only by 13 cents, that's going to keep me interested as a bear. But if we break it by 40 cents, all right, I'm wrong. It's not a rising wedge. So keeping an eye on that. And it's very clear inverse relationship with the broader stock market. So if we see a daily bounce in stocks, we will likely see daily EMA 12 support lost on the dollar. In the other trade that I took today, well, we'll get there. Gold, trying to bounce. Just looking for a daily lower high to be the result of that bounce, but holding on a bit better than the stock market world today. We know we've had a lot of correlation there. So we can see the bearish reaction to initial CPI, bullish recovery, but we'll be looking for anything under 1910 to just be a daily lower high. And silver and miners are going to be the same thing. So daily inside bar on silver, trying to get a daily bounce going. GDX, daily inside bar, much weaker close. So still very weak there in these miners. Tons of space for a daily lower high. Oil, bullish reaction to the inventory report. So this is one of two things are going to happen here. We're either going to confirm a daily downtrend with a very notable shift in this oil chart, or It's just a weekly high or low off EMA 12. And the bulls keep their complete control and keep grinding back up. Diesel prices have been through the roof. Potential shortages coming on the East Coast. So we'll see. But we're due for 4-hour consolidation at the least. It's a V-shaped bounce off the low. If bulls confirm a 4-hour trend change next time we consolidate, then that will increase the odds that we can head back up to the recent high. But my trade that I entered on energy is for this daily lower high, which I talked about in a recent video probably. So what I'm looking for is for energy. Again, look at this chart, monthly chart. Any chart that has looked like this has rolled over. And so I'm looking for bear rotation. Played bull rotation for years in the broader market. And I'm now watching for bear rotation. And so we're looking around at this market. Well, who do I want to short? I don't want to short Netflix down here. I don't want to short the FANG names. They're crushed. Who do I want to short? Well, we haven't seen monthly consolidation in energy in a long time. So again, just a counter trend trade. And I was actually live streaming crypto when I took this trade because I saw this pullback and the size of this hourly pullback. I say, okay, that's big enough where if we are going to set a daily lower high, we need to confirm an hourly lower high and lower low. And I saw this bounce. I said, all right, that's a big enough bounce for me. Entering bearish, I think my entry was 78.89, so I had a real good entry. Shout out to Adam. This is my favorite kind of message. So Adam was saying that really happy for the group. Last time he sat through pullbacks completely out of control. And again, it's the difference of being a leaf blowing in the wind versus controlling your destiny. And that is so empowering. And so awesome that Adam is feeling that. I got a shot of what? I don't know what. But when I read this, like, yes, I know that feeling. Control of your financial future, not just just watching numbers and you're helpless with your hands tied. So shout out to Adam. But energy sector, 78.89 had a real good entry there. We rolled over to a new low of the day, which was great. We're bouncing a little bit after hours because Bullard came out and alleviated some concerns about a 75 rate hike coming. He said 50s are, he pretty much said 50s are coming. So perhaps being able to price in some of the future Fed meetings for 50 basis points. So we're bouncing a little bit after hours, so not sure I'm going to get my gap down in XBI, but anyways, for this trade to play out, I am not going to be right. I have a great entry and I'm profitable, but I'm not going to be right on this trade unless 75.13 breaks. And for that to happen, granted, yes, energy names are much weaker than oil today, but I do want to see oil set a daily lower high as well to have confidence. And I do want natural gas to set a daily lower high. It is due for 4-hour consolidation, just like oil. 20% bounce with no 4-hour consolidation. So what I need to see happen for this trade to work out is for XLE to break daily support and for natural gas and oil to set daily lower highs. And I will stop out and I will be wrong if the high of today breaks. So a couple swing trades counter trend. The dollar is going against me. Energy is working well, but they're not high conviction trades. I'm not real aggressive in them. It's just going back to, again, just missing those cost and grocery name shorts. All right, I'm done. Have a good rest of your day. Do good things. That's all I got.